Welcome to Keep Hustling, where we are going past the why to get to the how. I'm your host, the always hustling Aaron Gordon, aka NY Risk Advisor, aka Mr. Keep Hustling. In this podcast, we will be diving deep into the professional and personal successes of our guests to find out how they hustled through the most difficult times in their life and their development to achieve the success they've gotten to today. So buckle up for what hopes to be an amazing ride. Let's get to it. Welcome to Keep Hustling with my guest, Chris Picciurro. Chris, thank you for being here today.
Aaron, we just accomplished something that most people don't. You pronounced my name correctly. So thank you. Appreciate it.
This has been another episode of Keep Hustling. No, I'm just kidding.
This will be your top-rated episode. We didn't say anything wrong.
There's nothing that could possibly get us canceled yet. Chris, really thank you for being here. I appreciate that. Those of you who are not watching, you should be watching, as I always say. But it's the middle of March. I'm sitting here in a sweatshirt and I have a little bit of hair on my head and a baseball cap. It's freezing here in New York. Chris is in a t-shirt. I'm not going to talk about his bald head, but maybe I would. And like he has this lighting going that it looks like he's sitting by the beach, but that's just near Nashville. So we appreciate Chris for taking out time from his beach time for being with us today. So Chris, thank you for being here again.
Well, it's my pleasure. And no worries. I enjoy having a bald head.
That's it.
I went for it early. You know what I mean? Why fight Mother Nature? So luckily, we have gorgeous weather here. It is the middle of March. Exciting time for sports fans, as we know. I don't know if I know this, though. Are you a Yankee or Met fan?
Very good question. No, I am definitely one, but I always, whenever people ask me that question, I preface it with a very important disclaimer, and that is that my father, he should rest in peace, gave us a blessing and a curse. And I start with the curse because it's very important. We are as diehard New York Jet fans as can be. And that's the curse. The gift, the blessing that which we didn't realize as children was a real gift is most Jet fans are Met fans, but not the Gordons. The Gordons are Jet fans and Yankee fans. So what that means, and I say that it's a blessing, but maybe it's not because what it means is we know what good sports are. We know that we can win. We know we've tasted a few World Series in our lifetimes. Mm-hmm. And we will never, ever, don't give me this, they just signed Justin Fields, he needs to be the savior. We said that about Aaron Rodgers. We said that about Zach Wilson because he was a high draft pick. We said that about Brett Favre. We said that about all these people. The Jets may inch into the playoffs, but yeah, I am a Yankee fan, thank God. But I don't know. We just got the Garrett Cole news, so I don't know what's going to be.
Jets have a long history of being lackluster, and but the Yankees are looking pretty good. I was just last week. So yeah, if you're not. We moved at episode 100, we moved our podcast to going on YouTube and they obviously, just like you, Spotify, it's all over the place. But I always wonder why people don't watch it, especially if...
I think that a lot of people are on the road when they do podcasts.
Yeah,
I think people associate podcasting with travel, car, commuting. And by the way, if you're commuting, do not watch. Just get one look at me, get one look at Chris, and that's it. We're done. We have no fancy graphics. I want to jump in here. You have a very unique business.
Correct.
Or expertise. And I'm just curious because we discussed, and I want to dig deeper into just in general what you do, but what makes a person, what happened in your life that made you say, like, I want to focus on teaching tax planning? Not I want to mastermind, not I figured out a hook, but like I want to teach it, or I feel like people are missing something, or I have the secret sauce. What made that happen for you?
Right. Well, I've always been very entrepreneurial. And I grew up in Detroit. We moved down here to Nashville about 9 years ago. And I've always just grinded. My parents are very working class, hard workers, great people. And when I was 13, I luckily got selected to be a Detroit newspaper boy. Now, Aaron, you're a lot younger than me, I would imagine. And so in those days, you might have played the video game Paperboy. Remember that poor sap driving his bike around and chucking papers?
God. Holy moly. I have not thought of that in years. I think about Mario all the time, but oh my gosh, Paperboy. By the way, the game made no sense. 0 sense.
Neither did the artist.
You could be way past the house. Fire it goes in. You could get it right on the money. Would have gone, oh my God, what a game. Oh,
you break a window or the dog comes after you. But I was a Detroit newspaper boy. And those times you actually delivered papers. And my parents.
What's a paper? It was like,
what's a newspaper? A newspaper is something you read. It's very fun. And it's really news. Good when you want to ignore.
And by the way, if something didn't make it, if something didn't happen early enough in the evening, you might not find out about it for a whole nother day. Because if you got your news from this thing called the newspaper, Gen Zers, millennials, listen to this. This is a crazy thing that happened. Unless you watch the news at night on TV, if like you left for school in the morning, all you did was flip through the paper when we were kids, right? And I am younger than you, but we did have the newspaper. You might not find out about something till like 12 or 24 hours later. There could have been a world war going on. You would have no idea. Children, and we all survived. It's amazing. Chris is here.
Yeah, for me, I was like a hero character, right? Because I got to deliver the newspaper. So we had the Detroit Free Press that went out in the morning. The Detroit News went out in the afternoon. I'd come home from school. I'd put all the papers on my bike. I would have to put these little inserts in. I would deliver the papers. Rule number one I learned from my mom. She said, you need to go to every customer and ask them where they want their paper delivered, right? Because just like in tax returns, a tax return is a commodity, but the service around it is the special sauce. So in Detroit, just like New York, half the year, it was crap weather. We had snow, we had rain, and no one wants to wonder if their Detroit Tigers played at what used to the team formerly known as the California Angels on the West Coast, and they crack open that Detroit News and it's soggy. Or God forbid, Gen Zers, you had the Friday paper that had something called a TV guide in it, and you had to look. You lazy slugs. You couldn't just put the channel. But anyway, you know what was amazing about that? That was my formative time of really learning how to run a business. I had to pay wholesale for these dang papers. I had to walk to people's houses, knock on their door. Now, if someone knocks on your door now, you got your gun ready, right? Knock on people's houses and say, call out. And I had accounts receivable. It was an amazing way to learn how to be an entrepreneur. And I saw how much people enjoyed getting their paper, right? And I loved helping people out. So fast forward, always been entrepreneurial. I ended up parlaying my newspaper business into, I started a whole baseball card store in my parents' basement, which they love that, of course. And I learned a lot about supply chain because there was one drugstore in our neighborhood, and I knew they got deliveries on Tuesdays, and I'd go buy both boxes of baseball cards they got because I had cash, and no other kids in my neighborhood could go get boxes of cards, so they had to come to me. And I had all this stuff going on, and it was just a hustle, man. That's why I love your podcast, but I really liked helping people out, and that was the formation of really, again, liking helping people out. But I also was pretty decent at math, and I knew I wanted to get into business in some way, shape, or form. So I said, okay, well, if I can become a certified public accountant, then I know I could do anything in business. I could run my own tax practice. I could do anything. And then I really like taxes because I feel like with audit, because when you're a CPA, you usually get into the audit side or the tax side. I want to work with our clients. I want to partner with clients and help them plan, because I see way too many entrepreneurs, and I believe entrepreneurs are the heart and soul of this country, busting their rumps and not surrounding themselves with the right people around them. We call it in Teaching Tax Flow building your board of directors. Now, board of directors sounds fancy, right? My family was extremely blue collar growing up. People didn't have an attorney, an accountant, and this. And so part of the reason, I know I'm kind of deviating, but part of the reason I'm passionate about Teaching Tax Flow is that we are building the first community for tax planning and strategy that's available to everybody. I truly believe everyone can benefit from tax planning and strategy. And actually, if you have a lower or modest income or asset level, you can benefit from planning more than someone that makes $1 million a year, because someone that makes $1 million a year, if they pay an extra couple grand of tax, it's not going to make or break them. A family making $40,000, $50,000, $60,000 a year, that could be a significant amount of their disposable income.
So we're digging right into it. First of all, I agree with you 100%. Everybody needs a personal and professional boardroom. I say this about the insurance business all the time. Our field, I'm an insurance broker by trade. It costs nothing to ask me a question or to have me in your boardroom. And I find that people are scared of that. People think, as you said, I don't deserve that. But everybody deserves to have people who at least give them the right advice so that they can make the best decisions. Now, you said most people feel, or the greatest impact is on what we'll call middle America, meaning not the highest earners and not the lowest earners. The lowest earners are just worrying about living from paycheck to paycheck. There's a lot of government assistance, government aid, things like that. A lot of the strategy, you can't strategize with a penny, but you can strategize with $1. You don't need 10, right?
Right.
So I want to focus specifically on entrepreneurs and then we can get to others. But even the average family, where do they get lost? The one who's making the dollar, not the one who's making the cent and not the one that's making the 100.
Right.
Where do they get lost? What should they be thinking about? How can they benefit most from your product? And I don't even push products on this podcast, as you know, but as we were saying before, and I want to get to hustlers and think with what people can do with that money afterwards. But like, where do people get lost and what should people be thinking about whether they reach out to you or not?
So it all starts with mentality, and everything we talk about today is complementary. I mean, we've got a whole tax planning and strategy community. Here's the mentality we've got to start with. In teaching tax flow, we've invented 3 laws of tax planning. Everything comes down to 3 laws, right? One of the first laws is that tax agencies are your involuntary business partner. The IRS is your business partner. The state of New York, the city of New York for you are your business partners. You're going to pay them a percentage of your income or assets. All right. So here's the thing. If you don't do any planning, they pick that for you. With the proper planning, you pick it. So think about empowering yourself and saying, I'm going to pick my tax. I'm going to pick so the goal is legally and ethically reduce the tax you pay in your lifetime. So let's look at someone that is.
Yeah, by the way, I just want to jump in here for a second. I want to be clear. I'm not talking to the person who says that they shouldn't pay any taxes. Everybody pays taxes.
Right.
We live in America. That's what makes the world turn. There is no law that says that you have to pay the most tax possible by any person and you should just hand it away. No, there's no law that says that. So I agree with you. I love that involuntary business partner.
They're your involuntary business
horrible.
partner. So it's just so if someone's starting a hustle, right? Understanding that different income is taxed at different rates. So let's talk about someone that's starting their hustle. Let's say they're making $100,000 a net a year, and let's say they're an Uber driver, or they're delivering DoorDash. They're making $70,000 a year. Well, many of those people might forget to deduct their mileage for their vehicle, and it's 70 cents a mile this year, right? So one great thing about being an entrepreneur is that you get to pay tax on your net income, not your growth income. Tax laws are written to encourage and discourage certain behavior. So if you get a $70,000 W-2, you pay tax on that 70 grand. Even if you have a home office, you got to buy suits, you got to buy no one has a briefcase anymore. It doesn't matter.
The briefcase is where you put the newspaper.
Yeah.
So we don't have those anymore.
So the thing is, they did go away because that's what you put your newspaper in. But if you are an entrepreneur, you pay tax on your net income. So that's after deductions. And let's look at a DoorDash guy, right? Or girl. Let's look at a real hustler. Second of the 3 laws of teaching tax flow is that cash flow and tax flow are different. As a business owner, real estate investor, we think about the cash flow. But let's say you made $70,000 of cash after expenses as a DoorDash person. If you just put that on reported that on your tax return, you would pay federal tax on that. You'd also pay self-employment tax, which is 15.3%. That's your Social Security and Medicare tax on that. So, but Aaron, what if you came to me, a tax professional, and said, well, man, I drove 20,000 miles last year. Okay. Well, at 70 cents per mile, you get a $14,000 tax deduction. Even if you only paid $3,000, $4,000 for gas, you get the standard mileage deduction at 70.5 cents per gallon or whatever. So now you're only paying tax on $56,000. So there are things that you have to be aware of. Working with a tax professional or understanding the rules, or even using a software that is intuitive and walks you through your tax return, you have the ability to reduce your tax. Now, tax planning is very proactive. Tax preparation is very reactive. There are certain things you could do and still affect 2024 in 2025, but the best planning is happening moving forward. Let's look at the DoorDash.
And by the way, I think, and I would say another thing to you. I would say that's like next level. Mm-hmm. The things you can do in 2025 that can help you in 2024, retirement planning, all that stuff. I'm with you. Correct me if I'm wrong. If every person did just the first thing that you spoke about, understood how they should be structuring their life, understand that everybody's an entrepreneur. People don't think that they're an entrepreneur, and maybe entrepreneurship is not for everybody, but at least people should be asking the question, in my opinion. And I'll get to the next point, which is something that you and I discussed before, but everybody should at least be asking the question, am I an entrepreneur the way I live my life currently? Maybe next level, right? Maybe the level up is, if I started acting like an entrepreneur, how could that help me? But step one is, am I an entrepreneur in my life? Now, I think that, and the reason why I wanted to ask you about that is because if people, I feel that especially younger people or people who are chasing their dream or chasing their hustle or want to redefine their hustle for themselves and for their families over generations,
Mhm.
if people ask the right questions, they might find out that they can actually do things differently. They
Mhm.
can actually live a life. As you said, the person who's making the family that's making $60,000 to $100,000 a year can chase their dream.
Absolutely. I see that. And I want
Meaning
to touch
everybody
on
says,
something.
in order for me to do that, I need to make $500,000 a year. What you're saying is that's actually not the case. Obviously, it's easier. Obviously, it's much easier the more money you have. But people don't even realize the money that they're throwing to the side to the IRS. That, by the way, the IRS doesn't even say they have to give them, or the state. So
Absolutely. So let's look at someone making a married couple making $100,000 a year. Okay. They get a standard deduction. Their tax rate, their marginal tax rate is 12% on the federal side. 12. But we're taught put money into retirement. Okay. So for those type of people, the biggest mistake I see is they're putting money into like a traditional IRA or a 401k. So and the money's growing tax deferred, but when they're X amount of years old, they're going to pay tax on the entire thing. So a
so
Roth
what if they
IRA
did a
might make
Roth?
sense. Yeah. So
I'm
for
not even an
listeners,
accountant. Oh boy.
pardon?
I'm not even an accountant, but I get passionate
No,
about this.
but you're
And by the way,
you're in the.
how many people don't even know? Maybe the person will say to you, "You're right.
Mhm.
You're right." But for this reason, I want to do the traditional. At least again, I think the most important thing here, and important that every single hustler, young and old, should know, and anybody who's listening to this podcast cares about building a better future and chasing their own hustle, is that at least you should be educated to make that decision. How many people in the scenario you're describing don't even know that there's a second option?
Right. So let's look at a quick example. Let's say you put in. I'm going to try to make the numbers easy. $1,000 into your IRA. Today, you get a 1,200. You get $120 tax benefit because it's a traditional IRA, and you're at the 12% marginal tax rate. Yay, good for you. Now you're young, right? There's something called the rule of 72. You probably know this. Rule of 72 means look at the average rate of return, divide that into 72, and that's how quickly your money doubles. Let's say the $1,000 you put in your retirement plan is going to double 5 times before you retire and take it out. Okay. So 1,000 becomes 2, 4, 8, 16, 32. And so when you take that money out, that $1,000 became 32,000. If you went into a Roth, the entire 32 grand would have been tax free.
Yeah, but just one thing. Again, I'm not an accountant. I'm not a tax strategist. But the other thing that people need to realize is that 1,000 is different because you've already paid taxes on it.
Correct.
Meaning, in order to get to that 1,000, you need to make 112,000. 1,012.
Correct. So you've got to figure out, and the reason I'm saying for the young,
And again, being educated, you got to figure out what is look at the 20-year plan of this option, which you'll pay the tax deferred, or this
right?
option where you're putting in less nugs, and make your decision. But at least understand the two buckets.
Right? Because someone at $400,000 W-2 wages is probably going to say, no, I want the tax deduction today. It's just scary. Let's say, think about we think tax rates are going to go up. So my point is, think about that. There's a big difference between tax deferral and tax free. And if I said, Aaron, you can go to your favorite bagel shop because you're in New York City and come in, have the bagel, enjoy it, don't pay me. In 30 years from now, you're going to pay me for that bagel and at whatever the price of the bagel is then. That's what's happening when you have tax deferred money in your retirement account. And I'm not saying there's a right, like you nailed it, the right answer. The right answer is diagnose, prescribe. So figure out what your marginal tax rate is today and figure out what works best for your household. But just know that there are options, like you mentioned.
What do you think is the single financial decision that people make early on in their life that has the greatest negative impact on them long term? And because we're all about positivity here, keep hustling. What do you think is the best decision that you've seen younger people make in your life that in their lives that has had the greatest long term impact for them that they might not even have realized when they made that decision?
So I think the practice makes habits. So when you first start earning money, figuring out living on a small of a don't sit there and sleep at the bus stop. Okay, you got to provide for your family, but try to earmark a sliver of money that's going to be going into some type of tax-free retirement account down the road, even when you just get started, and then start thinking about putting money away into passive income buckets, right? It doesn't always have to be, oh, I'm going to go buy a piece of real estate. Just buckets of assets that are going to grow and provide you with income.
But I can barely pay my rent. I can barely pay my mortgage. I only have $100 a month. How can I invest in
Then
something
you're,
that's
well, I guess
passive?
that you're living too high on the hog or get a roommate, house hack. I did that when I had my first condo. I had a roommate, one of my best buddies. Man, I was paying, my mortgage was $900 a month, but he was paying me like 600 for one of the bedrooms.
So you're saying that I would say that I think that one of the biggest pitfalls is that people have built-in excuses and preconceived notions
Mhm.
about X, A, about when they can get into investing, B, what kind of investments they should be thinking about, C, how growth happens. But more importantly, D, as you said, like, I am not the same way a person says, I am not of the stature to have a personal boardroom. I think people also have the stature of I am not of the stature to even be able to invest. Like, I have student loans, I have this, I have that. But I feel like there's a certain level of strategy that could be delivered. I just thought of a great question. What do you
Good.
think is the biggest difference between the way our parents handle their money and this generation handles their money? Meaning, what did they do that was right for them that we shouldn't do that's right for us? For instance, I'll just give you like a simple example that I just thought about. My father, he should rest in peace, was the world's most anti-debt human you ever met in your life.
Mhm.
Anti-debt human. And we could go back and forth on this. I know
Right.
there's experts and gurus and all that stuff, but his life goal was, I'd rather eat cereal and milk for dinner, sorry, and breakfast for a certain period of time to pay off my mortgage as quickly as I could.
Mhm.
And there are some people that say, and nowadays, especially young people, it's like leverage as much debt as you can. Don't take out more debt than you can afford to pay off. But everybody should have a mortgage. Billionaires have a mortgage. Multi
Mhm.
100 people have $100 million have mortgages, even though they don't need to. So, what do you think is the biggest difference between like post World War II or the baby boomer generation and the millennial generation, and how like things we shouldn't listen to our parents about?
Right. I think that my parents' generation, which is they're in their 70s, their behavior pattern was pay off your mortgage and have a lot of money in your retire and have some money in a retirement plan. The challenge with that is that you don't have a lot of liquidity. And when you take money out of your retirement plan, when you have to take that money out, what's called a required minimum distribution, you're taking it out at probably a higher tax rate than you were when you were working because you don't have dependents, you don't have a mortgage interest, you don't have deductions. And the other thing is you're drawing social security. Oh, that by the way, if you have retirement distributions, the tax on your social security is taxed now. So it actually, that mentality of lack of liquidity and it causes stress for seniors because now they're realizing, gosh, we're living longer. We need long-term care. We struggle to pay for that. And it's a big cycle because if I take money out of my retirement account, I'm going to pay tax on that. And it's a big vicious cycle.
Do you think retirement is overrated? Meaning people spend their whole career planning for their retirement. And I could speak, in my family, where my father was an entrepreneur, my mother's an entrepreneur. We own a small family business. I consider that entrepreneurship.
Oh,
We
yeah.
didn't invent Google, but we started with one client who's still a client today and going strong in in the insurance advisory space. And my father worked till basically his last day. And my mother, she should live and be well. One of our rules is she's never going to retire. Slow down, yes,
Right.
but retire, no. And I think that in that generation was like put as much away as you can, because when you're 68 years old, you're never going to want to work another day for the rest of your life. You're going to have a little condo in where you're from, New York, right? A little condo in New York, smaller than you live in now, a little condo in Florida, and that's what you're going to do. Life is going to be great. You're never going to have any financial worries. Well, nobody planned then, and I'm not blaming them
Mhm.
for working at 76, working at 80 years old. Gosh, I wouldn't have imagine they wouldn't have put all that money into their retirement when they were 30 if they knew they were going to never touch it.
Right. So it's funny because I had my kind of weird situation, but I turned 50 in January and my wife and I went to Florida. Kids are a little older, so we don't, we can get away for a long weekend. We were just we're so crazy with our lives the way they are right now. She's like, we were talking about retirement. I'm like, honestly, I don't want to retire. I truly love what I'm doing. Do I want to slow down? Yes. I already feel successful because not because of any type of anything financial, because my life's full of happiness. I love what I'm doing. I have the freedom to do things outside of work that I enjoy doing, be that spend time with my wife, spend time with my family, friends, go play pickleball, go to baseball games, coach kids teams, all that stuff. And I don't feel like, how many times do we hear, Aaron, where someone retires, they have they have a cake in the conference room, and then 2 years later they pass away. They
Two
don't have
years,
their
six
thing.
months. 2 years, 6 months.
Yeah. So, I think, if you work to learn, don't work for money, and you really love what you're doing, then you don't have to retire if you don't want to. I always want to be doing something, I don't. So it's weird, I guess. So with our or my parents' generation, there was that working to
Same. My
retirement, but
parents are
then
the
there's
same
stress.
generation as yours, by the way.
Pardon?
My parents are the same generation as yours, so that's why I
Okay.
asked.
Yeah. So then there's that stress of like, do we have enough money? Do we have to do this, do that? And so, yeah, I think that, and that's a nice thing when you think about entrepreneurs, hustlers right now. It's gone are the days where you get a job at Chrysler, General Motors, if you're from Detroit, and you hit a pension. They're gone. You've got to create your own pension. So if you can create a business and an enterprise that's going to pay you throughout your lifetime, then you have something. And that's what you have. You have a multi-generational business. That's amazing. It's so hard to do that. It's hard to have a business go through one generation, let multiple generations.
We're
But
trying.
you have that, and then you have an enterprise, and then you have something that's going to pay you, beyond the time that you're spending so much time working in the business.
I love that. And I think I honestly, I really think every single person who's listening to this, think about, and I would try to reach out to Chris. Again, I don't usually solicit, the market for other people's business in the pocket, but I think it's important. And it's the same thing with my business. Get that personal boardroom. And that doesn't mean that it needs to be hundreds of hours a year. But even to listen to this in 28 minutes, there's gems here. Think about it. Ask your accountant about a Roth IRA. Think about the way you're structuring your own personal finances, because what you don't want is for your hustle to be paralyzed or to be stopped because you didn't make that decision. You don't want to feel 5 years from now that I wish I could be doing something else, or could be having that side hustle, or could be spending more time with my family or doing things like that, and that would inspire my hustle, and I can't do that because I didn't ask the question. So I think that that's the most important thing.
Absolutely. We kind of were talking about the Yankees, and I'm a huge Tiger fan, but you want to be up to bat with a 3-1 count, not an 0-2 count. And that
100%.
that's what you can set yourself up by just using resources. I mean, even in the tax preparation field, many people at the middle to lower income, there's something called VITA, which is voluntary income tax assistance. They're complementary resources to have someone that's willing to help you have your tax return prepared for free.
Love that.
Now, tax preparation and tax planning are completely different concepts.
But at least you should be thinking about them.
Yeah,
But
they work
everybody should be
together.
thinking about them.
They
I love that.
absolutely work together. So
I absolutely love that.
you've got to plan it out. And I say, I think the different now with think about, like, I was the first one in my family to leave the Detroit area and move somewhere. But I think that now we have mobility of we can move places more easily. We've got, so especially for the people starting off, buying a home is typically going to be a good investment as long as you don't go crazy and overpay, because you have something called the Section 121 exclusion that if it's your primary residence for 2 of the last 5 years, a married couple can walk away with $500,000 worth of capital gain and not pay any tax on it. So that's something to consider while you're young. And again, practice makes habits. So try to be disciplined. It's so hard, Aaron. Right now, I read a book. I don't read, first of all. I shouldn't say that on a podcast. I listen to books. Okay, I listen to books.
Me too.
One's called The Gap and the Gain. And this book is amazing. And ultimately what it's saying is happiness only comes here from within. Happiness isn't, comparison's a thief of joy. And it's hard for Gen Zers, Gen Xers, that we're always looking at other people and how attractive people are, how rich people are. And we're ultimately comparing ourselves. You'll never be happy comparing yourself to other people. You can only be happy comparing yourself to where you're at and what gain you've accomplished since there, not the gap between where you want to be. So try to live in that gain. I catch myself in the gap sometimes too, right? But try to live in the gain. And if that means that your first home you purchase, is a small condo instead of that big estate, that's fine. It's okay.
Love that. 100%. Chris, we got to get you back on. We'll do another episode, hopefully, maybe, a little further down the road. We ask all of our guests to leave us with their favorite motivational, inspirational quote and what it means to their hustle. So with that, I'll say thank you, Chris Picciurro. I'm doing that just so that I could say it again, for being here and for the inspiration and for the knowledge. All of your contact information is below in the show notes. Everyone should check it out. Reach out to Chris, follow him. You'll get some amazing insight. And thank you again for being here.
My pleasure. And the quote, I am from Detroit originally, so I got to go with Henry Ford. Whether you think you can or you think you can't, you're right.
Love that. This has been another episode of Keep Hustling with Chris Picciurro. I did it a third time just so I can get it right. Remember, do well by doing good and always keep hustling. All right, hustlers, that brings us to the end of another fantastic episode. Thank you for listening. The listeners are the most important part of this show. If you like what you heard, please leave us a review wherever you listen to your favorite podcasts. Your feedback means the world to us and helps us reach more listeners. Plus, be sure to subscribe to our podcast so you never miss an episode. We have some amazing guests and topics lined up for you, and we don't want you to miss out. And finally, if you have any suggestions, comments, or even just want to say hello, please feel free to reach out to us on all social media platforms. We are Keep Hustling Pod on Instagram, X, Facebook, and LinkedIn. We would love to hear from you to continue the conversation. Thanks again for tuning in and supporting our podcast. We truly appreciate each and every one of you. Until next time, stay curious, stay hungry, and keep hustling.